How in the Sam Hill does somebody make money raising hogs these days?
Well, I mean, it's been a very difficult time. Obviously, 2023 was about the worst profit year we've ever had in the U.S. pork industry. And this year looks to be better, but it's still, according to my model, is still a loss year. Those losses are getting smaller, and so costs are trending downward a bit as the South American crop develops. The hog market has rallied some. We've seen a rebound in demand from mid-year last year that has helped us. Exports are good. So there's a number of things that are kind of pointing us toward profits, but we're not there yet.
The cost of production still have to be very seriously high.
They're seriously high. I mean, our model right now, last year estimated break-even of about $97, and we think our model is the low-cost 25% of producers. The average producer is probably $5 or $6 above that. Right now, for this year, it has $87. To put that in perspective, before 2021, our average for about 5 years was 63. So still a significant increase in cost of production that has to be accounted for at some point, and that's really a change driven by carbon policies and those kind of things that have changed the value of the various components of our grains.
Corn have to go down and soybean meal have to go down further in price?
To get to break even, it certainly does. We're not there yet. Obviously, at 87, we're getting closer. Soybean meal is probably going to go down because we're going to crush beans for oil, and so that's going to help us relative to corn. But both of them need to go down for us to get back to in the black.
So if someone wanted to break even in pork and raising hogs, where does corn price have to be, and where does the soybean price have to be?
Well, I would think we'd have to get at least below $4 on corn and below $300 on bean meal. I mean, those two numbers put us somewhere in the low 80s, and I think we have a market that's going to support that long term. Now, the problem is that $4 figure is probably below the cost of production on the corn, and the $300 bean meal is going to imply a pretty low soybean price as well. So the grain farmer is going to get in a little bit of a bind when that happens. So the economy is going to work to balance this out over time. It's probably not going to happen in 2024, though.